Let's now head into property and housing affordability. It was continuing to bite, of course, and that rental crisis continuing. In fact, it's worsening. And new challenges for new-to-market property investors at the same time. Let's get across the door. Anthony Landahl joining us from Equilibria Finance. Anthony, good to catch up with you. It certainly looks bleak from a renter's and I guess a home buyer's point of view. But okay, on the other side, what is the investment outlook then? What are investors actually looking for at the moment?
Yeah, g'day Andrew. Great to be here, mate. I think philosophically, investors are still seeing property as a good asset class, but they've shifted their focus from an environment of falling rates, and their concern then was the increase in the housing prices. Now their concern is that we're in an environment of rising rates, and for a lot of new-time buyers, that environment of rising rates is new for them. And the big impact of that is in one sense making them hold off on the market is their capacity. It's down some 30% on what they could probably borrow last year. So the type of quality asset they're looking at, they might have been looking at an $800,000 to $1 million asset. Now they might be looking at $600,000 or $700,000 in terms of getting into the market as a first-time investor. We're seeing some patience. We're seeing some rebudgeting, but it's a difficult environment. Their concern's gone from rising house prices to rising rates and the impact on their ability to get into the market and capacity.
Anthony, interested to get your perspective. Have you had a good look at the Victorian budget at all? Because obviously there's concern that they've got this new impost on housing investors there, and that could well be passed on to renters as a result. What do you think the likely outcome is?
Look, I think landlords are as concerned as renters at the moment, and I think that problem's exacerbated in Victoria. I heard your prior discussion around just the sheer level of debt in Victoria and some of the measures they're taking to try and, I guess, peg some of that debt back, and that's flowing through to property investors, flowing through to changes around some of the stamp duty concessions. Ultimately, for a property investor, they're looking at their cash flow, and that's king for an investor. So that may, in fact, flow on to two things. Activity, is it going to impact new investors coming into the market, and also whether it flows into the cost to hold a property that ultimately will flow to an even more tightening rental market down there.
All right, so interested whether you sort of just cast a view across the Tasman there, RBNZ lifting rates again. I don't know whether you feel as though there are any implications as to where the RBA is likely to take rates next and how that's likely to impact the property sector here.
Yeah, I think New Zealand's an interesting case. They started rising rates probably 6 months before we did. So their cash rate is sitting at about 5.5% now, which is well above where ours is sitting. So I think if there's any indication there, there's probably more pain to come for Australian mortgage holders. We've probably got one or two more rate rises. Housing prices over across the Tasman are starting to stabilise a little bit. And we're also seeing their inflation is a little bit lower than Australia. So there are some signs that the New Zealand economy is starting to get a grip on it. Some of that fiscal stimulus, which we've talked about before in New Zealand, is not happening. They're not having that surge in migration. So they're seeming to manage some of those inflationary pressures internally a little bit differently to Australia, albeit Australia's cash rate is still relatively low, whether you look across the Tasman, compare it to the US or UK. So I think from our perspective, there is more rate rises to come with inflation tracking where it is. It doesn't seem to be stopping the housing market though, which all signs are that it's rebounding over the last 2 or 3 months.
Anthony, was looking at figures early in the week, I think, for PropTrack, where they were looking at the availability of rentals for under $400 a week nationally. It's halved. It's becoming increasingly difficult, particularly for low-income earners, to actually find a place to live. And I guess, once again, this is where investors can come in with build-to-rent. But that is, a long-term proposal there. What's going to happen with this rental crisis then, do you feel?
Yeah, I don't think there's a short-term solution, to be frank. Our data that we've been looking at is showing that investors are still sitting on the sidelines little bit. Investors provide properties for renters. It's a basic supply and demand issue. While if availability of rentals is down, it will push up the prices. We've got surging migration numbers coming through. We've got tight vacancy rates. Those rent-to-build schemes, as we know, take time. Investors are finding it hard to hold a property at the moment. You quoted a little bit of data there, but rents have increased about $340 on average a month. The cost to hold a property, the $500,000 mortgage for an investor has increased about $1,100 a month. So cost to hold for investors is getting harder, and it's harder for them to get back in the market as well, as we touched on before with these rising rates. So we're seeing investor activity still down 30-odd%. So that doesn't help our supply in the short term, where demand is surging. That is only going to increase that rental crisis even more, I think, in the short term.
All right, Anthony, bottom line, property prices then. What are you seeing at the moment? A lot of this, of course, depending on where the RBA takes its rates from here. But I've asked you this question before, whether you feel as though we have seen a bottom.
Look, we've been looking at this for a little while. Property prices stopped really dropping nationally in some areas around January. And over the last 3 months, we've seen growth. So nationally, year to date, prices have rebounded 1.3%. Sydney year to date is leading the way. They're up 4.8% property prices. Other states are following. Auction clearance rates sit above 70%. In fact, auction activity is up 13%. So it's not like auction clearance rates are holding where our volume are falling. So we got more auctions coming onto the market, and clearance rates are also increasing. So the market remains resilient. We were talking about a top to bottom of between 15 to 20% 12 months ago. It looks like that's more like 9%, and we're actually starting to see growth back in the market. So market remains resilient, seemingly outside of some of the impact of interest rates, with other factors such as the surging migration, overseas inquiries on Australian properties up 127% last quarter. So there's other factors coming in that are holding up that property market and seeing growth come back in the market.